Ajay, fantastic to have you back. Thank you for joining us. I can see
Thank
the
you very
moustache is back.
All right. Yes, as the year closes, we start again.
It's November, Nikunj. Since you can't keep one on air, but he can.
He has that liberty. So it's a seasonal, or is it a trend indicator that when you feel bullish or bearish? I mean, it's nothing like that, right?
Oh, when I escape the market volatility, it should come back, right? Or when I feel lazy, it should come back.
Trust Nikunj to draw a market correlation in just about everything, Nikunj. Is there something to do with the purple color of your tie also?
Just matching.
Okay, thank God for that.
Well, Ajay, do you sense the market volatility because of global events, or do you think it's got something to do with the things happening in your neighboring state?
Neighboring state.
I mean, I'm talking about
relatively closer.
Relatively closer.
Okay. Relatively closer. Okay. Of course, it is impacting us because, I think it is not just Bihar alone. I think there are 2 or 3 major issues now which is impacting the market. And when we talk to the market and the people, and one of them is, which most people are ignoring, is the social context to what's happening in this economy and how will it finally impact the economy. We haven't spoken about it. We don't deal with it. It left to the mainstream channel. But now, for the first time, it's starting to impact, and people are wondering as to what is happening. Is it going to kind of work itself into a frenzy? Because the ruling party loses, will they lose control on all these elements, and it becomes more difficult to do business in this country. And when people find it difficult to do business or live in this country, you can't have economic development. So I think that's one overriding agenda which is now starting to bother people, not too much, but it's started to come into discussion at least. The second, of course, is the model of economic development. I think now industry is gradually realizing that the FDI-driven model of development with the government propagated is not necessarily giving us jobs, is not necessarily giving us domestic growth. And if you see what's happened with the Foxconn kind of investment, a blank check, that's not the way to do employment generation in the country or support the Indian SME market or so on. So there is also an element of doubt creeping in that the model of economic development, is it conducive to what's happening to the economy? Will it gear up to say, the economy needs to move? And the failure of Indradhanush, I think that's the stalking failure, that it was a big bank reform. You saw the share prices move up, and you saw what happened within 2 months' time, the prices are below what their levels were. So I think it's a combination of political, social, and economic model which is all coming into play, which is letting people hold on to their expenditure or investment on one side, and the industry today, when you go around, is really feeling the pinch and not finding a way out of the recessionary situation they face on the ground. So it's a culmination, and I think Bihar elections will be symptomatic of what the mood in the country is perhaps.
And Ajay, just to stretch that point forward, do you think the market has already begun pricing in all these disappointments? Earnings, for instance, are already sort of in the price, but what about the other parameters? Because slowly you're seeing the market, not reacting to positive global cues, nothing. It's just slowly grinding lower and lower by each passing day.
You're right that gradually, as I said, gradually there's a realization coming in that this is not working. And unless, the problem is not this. It's not working is fine. It's not worked many times. The issue is that the so-called headline 7% growth rate puts you into a kind of a stupor to say, no, everything is all right. What's wrong in a 7% growth rate, which typically would say nothing wrong in a 7% growth rate, except it's not 7%. It's some statistics which I don't know from where it came from. So, as people are saying, if you don't address the issue, then you're not going to find the solutions. So solutions are finding a context of FDI-driven investment, FDI policy, FFPI investment. That's the sole driving logic. That doesn't work in this country. It's not worked for last 1 year. It's not going to work. So you're right, slowly is realizing that the economic fundamental, the economic policy itself is not working the way it was promised to work. And I think that's why even investors, look at, I think he said, Nikunj said correctly, this year is kind of a washout. But it's not a washout, Nikunj. A lot of investors are sitting with lots of losses because they built in big investment. If you look at mutual fund, for instance, a big investment is built in the first quarter or the first 4 or 5 months of the year at high index rates. So they're actually sitting on losses, not necessarily, comfortable in their positions today. So it's a pretty sad way to perhaps end the year. We started the year with a lot of hope, ending the year with like the Delhi weather, gloomy and toxic.
Trust me, you are better off. Come to Bombay and you will know.
It's haze and it's pollution. You can't see anything.
And extremely hot.
Yes.
Yeah.
Yes. Anytime Delhi, Bombay, I'm ready to change places.
All right. Okay. Any case, I need to move out of my city any case because I am a beef-eating Indian. I can either go to Pakistan or go to somewhere else perhaps.
That's a different conversation, maybe not on this forum. I know that's a big elephant in the room, but maybe we'll discuss it on some other forum. Back to markets, and my point is that the reason why equities look good is because others are looking bad, which is gold, fixed deposits, or for that matter, real estate. Now, Indians are still saving. We've got a $500 billion of annual saving. The option is that there is no other alternates, and if alternates are not doing well, maybe equities will do well.
No, alternate is the gilts in India. I think government securities are formed, perhaps in my view, we have told our investors that maybe almost 50 to 60% portfolio is in gilts already over the last 6 months. We think that in the next 3 years, the gilts will perhaps outperform the economy and the stock market. And 3 reasons for that. One is, the premise of the whole system is that the interest rates are going to fall, which is good for the people holding gilts, of course. The second is that the economy will outperform what had happened in the last 2 years, and therefore stock market will outperform and we'll be the outperformers. Unlikely to happen because the big things happening, which is the crude prices falling, the metal prices falling, the global interest rate at the lowest, is all going to be finishing off in this year. And as we go down the path the next year, we're not seeing oil prices retracting. We're not seeing interest rates going back. Global interest rates, can't go below zero in any case, so for the matter. So I think, from a perspective of that, you should have a large portfolio of gilts in your portfolio, at least if you're an Indian, and that should give you perhaps as good a return as an equity portfolio over 3 years would be. Except, I keep saying that it is a stock picker's market. If you happen to chance across a few gems, you hold on to them, they might give you a superior return. But market on a whole, perhaps you would be better off with the gilts being a large part of the portfolio and keeping a smaller portion in equities as things stand today. It may change in the next quarter perhaps, but today I would say gilts is one of the best investments you can have. And tax-free bond, of course, which are so difficult to get. It reminds you of Russian days when you used to stand in the queue for getting a milk bottle. That's the way the tax-free bonds are being given to the Indian public. So if you can get hold of them, get hold of them.
Ajay, you're sounding the most bearish that I've heard you in the last 6 months, quite frankly. Now, aside of the sentiment, are there core facts which could, verify the statements that you're making? For example, if you believe that earnings will not come back in the next 2 quarters, if you believe that globally things will remain bad and therefore India will not do well, because we speak to a lot of global guys and they are saying that for whatever reason, sitting from their perch outside India, if they are looking at investment opportunities, India stands out. So liquidity will definitely aid India.
See, I don't know, there's no homogeneous bunch of investors worldwide by and large, but technically speaking, when you give zero interest money to people, they would invest everywhere in the world, which is what is happening. So that's not, take it that that's a gospel. You already seen in this month. We go current. Nobody is saying that people are going to walk out of India or any such thing. But the issue is, what is going to be the incremental flows and will they influence the market? And do we have triggers to get the incremental flows in? That's the 3-point agenda that we are looking at. And there we see this situation wanting. The good, that's what I said, some of the very good parts, big investments, oil price crash, the metal prices going down, is all through. The optimism of the new government policy is all through. Now it's about delivery and execution. And there we have a difference is that the model of economic development followed by the government, which is high indirect taxations, lower disposable income with the people, and perhaps too much reliance on big bang issues rather than day-to-day business working. If I tell you something, you'll be surprised that in Delhi customs you can't work for more than 4.5 days in a year, in a week to clear out your goods. Now that doesn't make you ease of working any better than what it was last year or last to last year. It's exactly the same it is in customs, excise, service tax and all these people. So, so micro things which are supposed to improve our efficiencies have not happened. Big bang reforms, you saw Indradhanush cannot deliver the way they're supposed to deliver. So in a sense, there is a waning feeling that the big policy items are already through. Yeah, GST will come and GST will give you impact 3 years down the line, but that be so. But this daily working of business and daily people wanting to buy goods and services, that is where the despondency comes from. I'm not a great negative person because I'm an equity guy by nature. I don't like debt. I can honestly tell you, unless I'm forced to put money in gilt, I will not do it. But today I'm forced to put money because I can't find many places to put my money for equity.
So tempted to ask you, what product of yours was stuck in the customs for 4.5 days?
Oh, we have some investments in the companies who import goods. So we kind of tracked them to see what their delivery situations are, and that's when they came up and said, listen, this is what is happening. Okay, I said, okay, fine. Then we saw it's a pattern. It's okay, live with it. So this is what happened last year. We saw the statistics. This is it. So we said, okay, fine, we'll live with it. What else can we do about it? We are, takers. We are not a givers. So point is that every single business in this country encounters this every day, and that is full in the realm of the government to cut the bureaucratic, cut the delays, and make us more efficient. That's all we are asking, and that's all we were expecting it to happen. It may still happen. I'm not thinking that I've written off the case, but so far the progress on the ground for these nitty-gritties is low, which impacts the smaller businesses. May not be the larger businesses, but it does impact the smaller businesses. So perhaps the signal from Bihar would be expedite economic development, do something good, and that may be the silver lining for Bihar elections perhaps.
Well, Ajay Srivastava almost makes it sound like a given that the verdict is going to be anti-NDA. Ajay, now we've discussed a lot of the macro. I just want to focus a bit on a few micro things as well that are happening. By the way, I don't know whether you saw the news or no. We put it out first yesterday that Volkswagen India has also gone ahead and cheated on the emission tests. So maybe your Audi, the resale value could have a bit of an impact there. But which brings me to the auto discussion, Ajay. The things have changed out there. Suddenly we're seeing a Tata Motors being in the thick of things. In the two-wheeler pack, while the Heroes and the Bajajes may be doing well, TVS now suddenly seems to be shining out bright as well. And Ashok Leyland, by virtue of the fact that it's run up so much, is facing a bit of an issue there. What's your view out here?
See, view is very positive. The only issue I have in the market is that when you look at good companies, they're not coming cheap or even reasonable. They're expensively priced. So whether you look at Maruti, whether you look at Eicher, for instance, the standout performer for last 3 years, there's nobody better performer than Eicher in the Indian auto market perhaps. That's a given, right? The stocks are not cheap. So, when you look at 3 years down the line and says, what kind of return I make? And these stocks were not cheap and they've given negative return this year. If you look at Eicher was 21, 22,000, is now running between 17 and 18,000. So it's not like they're available cheap for you to buy and make a handsome equity return. Therefore, rather than chasing the best performers in my view, which is what typically the policy would be, I would guess the equity stories will come from finding out little more cheaper but a conversion or better performing stocks which might have a future. Because when you book a Maruti or a Eicher kind of stock, you don't expect equity returns. You get gradual returns coming out at these valuations. So you need to make really, I was telling somebody yesterday that this is the time when we are really working so hard, and I never thought in my life I'll work so hard, to find the candidates which make sense to us to give equity rate of returns over 3 to 5 years. 10 to 12% return, anything I can find, that's not a big deal. But to find 20-25% return candidates, those are getting very difficult to find.
I'm sure you don't want to share those 10 to 15 return names also with us, would you?
I told you, just put the money in gilt, you'll get 12%, 14% return. Believe me, why do you have to waste your time with equities? That's as simple as that. Gilt will have given us 12, 14% this year in the last 12 months, will give you another 12% in the next 12 months. So there's no need to worry about equities at all then.
But do you think times will change sooner or later, much as they did 2 years back as well? You were sounding as bearish as you are today.
I don't know if I was bearish or not, but since I made money in equity, so perhaps I was not so bearish. But leave that aside. I think today I am saying we are at an inflection point because there is everything going for this country. We have a ruling party in majority. Oil prices historic lows, metal prices historic lows, interest rates on the downswing. Nothing more could have been given to this country to go forward as the way we all wanted to go forward. And that's why I say I have great expectations, right? Because nothing more can macroeconomically work for us. Our deficit under control, indirect taxation is going up, the government is liberalized policy, I have a right-wing government in place. What more do I want? Actually, I want everything which has been given to me. Somehow, the translation is where the problem is, and I'm really hoping, that translation will come about in the next 12 to 18 months. And that's why I said, perhaps Bihar election will have a positive fallout, that the execution part will start to accelerate, and we will see greater translation of policy into action, into our stock market realizations. That's why I'm hopeful, because I don't think India has ever had a better set of situation than we have today. But whether the translation will happen, time will tell. I'm hedging my bets and saying 50% gilt, 50% equity. Maybe that's wrong, but maybe perhaps that could turn out to be right. I don't know.
Okay, Ajay, we'll leave it at that. Thanks so much for taking the time out and joining us. We are all
Thank you very
hopeful
much.
for things improving.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.